RPSG Ventures agrees to acquire a 40% stake in FSP Design, parent of luxury label Falguni Peacock, via a mix of primary investment and secondary purchase, and also secures the right to acquire an additional 10% within 18 to 24 months. Which deal structuring concept best describes this combination? Your options are A. 100% leveraged buyout, LBO, full control financed primarily with debt. B. Distressed asset sale liquidation of a failing company at a deep discount. C. Greenfield investment, building a new venture from scratch with no prior target. D. Minority strategic investment with a structured call option for future stake increase. And the correct answer is option D. Minority strategic investment with a structured call option for future stake increase. The transaction values FSP Design at an enterprise value of about 455.17 crore rupees. The company reported FY25 revenues of 891.75 crore rupees. Ignoring debt cash details, which valuation interpretation is most accurate? Your options are A. The implied EV sales multiple is a little above 5x, typical of very high-growth software businesses. B. The implied EV sales multiple is well below 1x, suggesting the investor is paying less than 1 year's revenue for the business. C. The implied EV sales multiple is exactly 10x, consistent with late-stage tech unicorn valuations. D. EV sales cannot be computed at all without knowing EBITDA margins and PAT. And the correct answer is option B. The implied EV sales multiple is well below 1x, suggesting the investor is paying less than 1 year's revenue for the business. RPSG's vice chairman describes Falguni Peacock as representing a modern Indian luxury identity, rooted in heritage yet unapologetically global, with a belief that Indian craftsmanship deserves a global stage. Which branding concept best captures this strategic positioning? Your options are A. Country of origin effect and luxury brand internationalization, leveraging an Indian heritage story to build a global couture brand. B. Generic mass market branding, removing all references to origin or craftsmanship to appeal to everyone. C. Private label anonymity, hiding the designer brand in favor of retailer brands. D. Cost leadership positioning, competing purely on low price with no emphasis on identity. And the correct answer is option A. Country of origin effect and luxury brand internationalization, leveraging an Indian heritage story to build a global couture brand. RPSG Ventures is described as a strategic arm of a diversified group, taking a large minority stake in a fast-growing luxury couture house with strong brand equity. From a corporate strategy perspective, how does this move best fit into a portfolio-building logic? Your options are A. Building a consumer brands platform, selectively taking stakes in high-equity lifestyle and luxury labels to assemble a differentiated portfolio. B. Vertical integration into raw material sourcing for basic commodities. C. Conglomerate expansion into heavy engineering and capital goods manufacturing. D. pure financial arbitrage, short-term trading of listed securities with no strategic involvement. And the correct answer is option A, building a consumer brands platform, selectively taking stakes in high-equity lifestyle and luxury labels to assemble a differentiated portfolio. Falguni Shane Peacock sells its products in India and internationally through exclusive brand outlets, multi-brand stores, and online channels. Which retail channel strategy concept best describes this approach? Your options are A. Omni-channel distribution with selective luxury placement combining own-brand boutiques, curated multi-brand presence and digital channels. B. Single-channel push relying only on wholesale distribution to anonymous retailers. C. Disintermediation, eliminating all physical stores and selling only through one marketplace platform. D. Exclusive franchise-only model allowing only third-party franchisees to carry the brand. And the correct answer is option A. Omni-channel distribution with selective luxury placement combining own-brand boutiques, curated multi-brand presence and digital channels. RPSG Ventures acquires its 40% stake in FSP Design through a mix of primary and secondary shares. What does this structure achieve? Your options are A. Pure primary infusion, all funds go into the company, none to sellers. B. Pure secondary sale, all funds go to existing shareholders, none to the company. C. Mixed primary-secondary deal, some funds go into the company, some to existing shareholders. D. Rights issue structure, new shares offered only to current shareholders in proportion. And the correct answer is option C. Mixed primary-secondary deal, some funds go into the company, some to existing shareholders. With a 40% stake and an option to go up to 50%, what governance position would a strategic investor like RPSG Ventures typically seek? Your options are A. Passive minority, no board seat and no formal information rights. B. Full control buyer decides all key matters exactly like a 100% owner. C. Dividend-only holder receives cash flows but has no say in decisions. D. Strategic minority, board seat, information rights and consent on key reserved matters. And the correct answer is option D. Strategic minority, board seat, information rights and consent on key reserved matters. FSP Design's revenues move from about 68.5 crore rupees to 76.5 crore rupees to 891.75 crore rupees over financial year 2023 to financial year 2025. What should a strategic investor focus on before closing the deal? Your options are A. Growth quality review, analyze channels, margins, repeat orders, discounts and credit terms. B. Headline figure focus, accept financial year 2025 revenue as sufficient proof of performance. C. Vanity metrics check, rely mainly on followers, hype and celebrity exposure. D. Randomness assumption, treat the jump as noise and ignore detailed analysis. And the correct answer is option A. Growth quality review analyze channels, margins, repeat orders, discounts and credit terms. The couture label operates under the name Falguni Shane Peacock, and the founders remain core to creative direction. Which brand form is this? Your options are: A. Generic corporate brand, impersonal name not linked to specific designers. B. Retail private label brand created and owned mainly by a retailer. C. Eponymous founder brand luxury label built around the designer's own names. D. Ingredient brand technical component brand used inside another product. And the correct answer is option C. Eponymous founder brand luxury label built around the designer's own names. As a strategic investor in a luxury house like Falguni Shane Peacock, which path best reflects a credible value creation and exit thesis? Your options are: A. Cost squeeze play a cut design and marketing to push up short-term margin. B. Premium scaling play build global omni-channel presence, strengthen brand and prepare for IPO sale. C. Mass discount play reposition as a low-price volume fashion brand. D. White label play drop the brand name and manufacture anonymous garments for others. And the correct answer is option B. Premium scaling play build global omni-channel presence, strengthen brand and prepare for IPO sale.